The Toronto real estate market, which caught fire during Q1 and Q2 of this year, has seen its first slowdown in 2023. And I doubt this news will come as a surprise to you, given the Bank of Canada increased interest rates at the beginning of June, and Tiff Macklem did not signal a pause for July 12th. We saw articles like this one saying the Bank of Canada stomped on the housing market rebound, which we can now look back on and say, that's a pretty accurate headline. I expected a slowdown in market activity following the rate hike and the announcement last month, but nevertheless, I was very curious to see how the market reacted. And that's what we're going to look at today, the Toronto real estate market June data. But before we get into that, my name is McCallum, and if you want to be learning about the Toronto and Canadian real estate markets, then you are in the right place. I run a real estate team here in the city of Toronto, and we specialize in residential resale. And we're on the ground level every single day helping our clients buy and sell real estate. If you could do a huge favor for me and click both the like and subscribe buttons, I would greatly appreciate it. The more likes this video receives, the more the YouTube algorithm will push it to other people like yourself looking to learn more about Canadian real estate. And my goal is to hit 500 subscribers by the end of 2023, and we are well on our way. So share this video with someone if you think they'd be interested in it. And if you'd like to book a one-on-one call with me to chat about buying, selling, or just about the real estate market, you can go to the first link in the description of this video and book a meeting directly into my calendar at a time that works best for you. First off, active listings for 2023 in black continues trending upwards, and we tend to see this number start to lower in May or June, so it'll be interesting to see what happens throughout July. And new listings for 2023 as well in black trended upwards in June, whereas in previous years we typically see new listings decrease in May or June. Again, this will be a data point that we want to focus on moving forward. Let's kick it off with year-over-year GTA market performance. So these three charts and graphs represent market activity in all of TREB, not just the city of Toronto. We saw roughly 1,000 more sales in June of 2023 than in June of 2022, which isn't too surprising given that in June 2022, we were still in a downwards trajectory in terms of market activity. Although not surprising, I did think we'd get closer to 8,000 sales across TREB. The average price across TREB listings increased about $40,000 from June 2022 to June 2023, which again is not overly surprising given the run-up in prices we experienced in Q1 and Q2 of this year. The number of new listings dropped 3% year over year, and active listings is down 12.3%, both of which is not ideal because it means buyers have less inventory to choose from compared to last year. Listing and property days on market dropped 6.7% and 20.8% respectively from last year. Okay, now let's analyze just the data for the city of Toronto. I'm going to start off with the average sale price across all asset classes because I do want to then show why the price drops are occurring. Detached homes dropped 7% month over month to 1.78 million. Semis increased 1% to 1.4 million. Townhouses dropped 2% to 1.29 million, and condos dropped 2% to 770,000. We saw drops in 3 of 4 asset classes, primarily due to the Bank of Canada interest rate hike, which is a cop-out answer, but let's dig deeper into the data. The number of sales decreased in, you guessed it, 3 of 4 asset classes. And the only home type to increase in number of sales was semis, which, if you recall, was the only home type to see an increase in price. And then we want to take a look at the number of new listings which were brought to the market. Condos continue to see an increase in the number of new listings, whereas detached, semis, and towns all saw a drop-off. Now we'll move into the number of active listings at the end of the month. Active listings increased in 3 of 4 home types, and again, the outlier being semis, which saw a 2% decrease in active listings at the end of June compared to May. With more available inventory on the market as the month progresses, we should expect to see a slowdown in prices. And here's where we're going to get a lot more clarity, and that is the sales to new listings ratio. And to recap, 60% or more is a seller's market, between 40 and 60% is a balanced market, and under 40% is a buyer's market. To 50% and condos drop to 45%. So essentially, we're seeing roughly twice as many new listings as we are number of sales across detached, towns, and condos. And that's why we experienced downwards price pressure last month. Interestingly, all housing types continue to sell for over asking on average, but we're starting to see a slowdown in the trend upwards, which started in January of 2023. If you're buying and or selling a home in this market, I would plan for fewer showings and fewer offers. Now let's move into months of inventory, which is my favorite stat. We started to see an uptick across 3 of 4 housing types, with again the outlier being semis. Condos jumped up to 2.3 months, detached up to 1.7 months, towns up to 1.2 months, and semis are below 1 month of inventory. If I'm a seller, I'd be watching my neighborhood like a hawk to try to list when there are fewer homes for sale in my neighborhood. And I'm going to make my home present better than any other listing in my market. If I'm a buyer, on the other hand, I'm talking to my mortgage broker about a pre-approval to lock in a rate in case the Bank of Canada increases again this month and bond yields go up. I'm avoiding properties listed artificially low, and I'm looking at properties which may have been sitting on the market for 2 or more weeks. I hope you found this video helpful, and again, if you want to chat further about buying, selling, or just about the market, go to the first link in the description below.